Welcome to the Daily Globe. Please subscribe and hit the bell icon for more breaking updates. In today's hyper-connected world, social media platforms have become the main stage for news, opinions, and sometimes wild rumors. With just a few taps, a single post can reach millions, sparking conversations and controversies that cross borders in a matter of hours. The speed at which information travels is unprecedented, and so is the potential for misinformation to take root and flourish. Recently, a sensational story began circulating online. It claimed that the Philippines had loaned a staggering $250 million to the European Union. This narrative was a dramatic reversal of the usual storyline, where developing nations are often seen as recipients of aid from wealthier regions. The rumor quickly gained traction, with many sharing it as a point of national pride. For countless Filipinos, the idea of their country stepping up as a lender to the EU was more than just news. It was a symbol of progress and empowerment. It flipped the script on international relations, offering a feel-good story that resonated deeply with those eager to see the Philippines recognized as a rising economic force. However, the reality is much more grounded. Historically, the Philippines has been a recipient of European aid, not a lender. The European Union has provided significant support to the Philippines in areas like disaster relief, development projects, and humanitarian assistance. The idea of the Philippines lending money to the EU simply doesn't align with the actual economic relationship between the two. This viral rumor is a powerful example of how easily misinformation can spread, especially when it taps into national pride and collective aspirations. People are often quick to share stories that make them feel good or reinforce their hopes, sometimes without pausing to check the facts. By taking a closer look at the facts, we'll uncover the real financial ties between the Philippines and the EU. We'll see why the rumored loan isn't just untrue, it's economically impossible, given the vast differences in the size and strength of their economies. Understanding these realities helps us see through the noise and focus on what's actually happening. In the end, this story serves as a timely reminder of the importance of critical thinking and fact-checking. Before we hit share, it's worth asking, is this too good to be true? In a world overflowing with information, being careful about what we believe and spread is more important than ever. The idea of the Philippines lending to the EU ignores decades of documented financial aid flowing the other way. Since 1996, the EU has provided over $170 million in humanitarian funding to the Philippines, targeting disaster recovery and conflict relief. Over $100 million has gone to disaster response, while $43 million supported communities affected by conflict in Mindanao. The EU also invests in disaster preparedness, helping local communities build resilience against future calamities. This is a one-way street. The EU, a global economic powerhouse, is the donor. The Philippines, a developing nation, is the recipient. The rumor of a Filipino loan to Europe completely reverses this well-established reality. The Philippines' vulnerability was on full display from late 2024 to early 2025, as 6 major cyclones devastated the country in a single month. Millions lost homes and livelihoods, overwhelming local resources and making international aid essential. The EU responded with millions in emergency funding, providing shelter, food, and medical care to those most affected. Ongoing conflict in Mindanao has left over 125,000 people displaced, compounding the nation's challenges. EU aid supports both disaster relief and conflict recovery, helping families rebuild and communities stabilize. With national resources stretched thin, the idea of the Philippines lending to the EU is not just unlikely, it's impossible. The real story is one of urgent need and ongoing support, not financial strength. When we trace the movement of money between Europe and the Philippines, a consistent pattern emerges. Capital flows predominantly from Europe to the Philippines, not the other way around. This is not just a matter of perception, but a reality backed by financial data and international transactions. The direction of these financial streams is crucial to understanding the true nature of the economic relationship between these regions. Beyond the realm of official development aid, European banks and financial institutions play a significant role in the Philippine economy. They invest heavily in major Filipino corporations, such as San Miguel Corporation, providing hundreds of millions of dollars in loans, credit lines, and bond purchases. These investments are not just numbers on a balance sheet. They translate into real projects, infrastructure, and business growth across the Philippines. The involvement of European capital is a driving force behind many of the country's largest corporate expansions. However, while these investments fuel economic development and job creation, they also come with challenges. For example, some of the projects funded by European money have been linked to environmental issues, such as oil spills and pollution near industrial sites operated by companies like San Miguel. This highlights the double-edged nature of foreign investment. It can bring prosperity, but also environmental and social risks that must be managed responsibly. European governments, for their part, continue to provide aid and technical assistance to the Philippines, supporting disaster relief, education, and environmental protection. Yet, the investments from European banks can sometimes inadvertently contribute to the very environmental risks that aid programs seek to address. This creates a complex and sometimes contradictory dynamic where support and risk are intertwined. Despite these complexities, the underlying financial reality remains unchanged. Whether through direct aid, private investment, or commercial loans, the flow of money is overwhelmingly from Europe to the Philippines. This is evident in transaction records, investment reports, and the visible impact of European funding on Philippine infrastructure and industry. The rumored $250 million loan supposedly going from the Philippines to the EU simply doesn't align with any documented financial flows. There is no credible evidence or official record supporting such a transaction. In fact, the idea runs counter to the established pattern of financial movement between these regions. Ultimately, the real relationship is defined by European support, through both aid and investment, rather than Filipino lending to Europe. Understanding this direction of financial flows is key to seeing the bigger picture of how Europe and the Philippines are connected in today's global economy. International aid is more than just the transfer of money or resources. It's a powerful tool of diplomacy, a subtle yet significant way for nations to project their influence and shape the world around them. When countries provide aid, they're not only offering assistance, they're also making a statement about their values, priorities, and ambitions on the global stage. Aid can open doors, build alliances, and sometimes create dependencies that last for generations. For the European Union, providing aid to Southeast Asia is about more than charity. It's a strategic investment in relationships, stability, and influence. By supporting development, disaster relief, and governance reforms, the EU promotes its ideals, democracy, human rights, and economic cooperation, while also securing its own interests in a rapidly changing region. Aid becomes a bridge, connecting distant continents and fostering mutual understanding, but it also serves as a reminder of who holds the upper hand. For the Philippines, receiving aid is a double-edged sword. On one hand, it's a vital source of funding for infrastructure, education, and disaster response, critical needs for a developing nation. On the other, it can spark political tension and public debate, as leaders must balance gratitude for international support with a deep-rooted desire for independence and self-determination. Every aid agreement is scrutinized, and every condition attached can feel like a challenge to national dignity. That's why the rumor of a Filipino loan to the EU captured the public imagination. It wasn't just a financial story. It was a narrative of national pride, a fantasy where the Philippines could stand tall and offer help to a global power. For many, it symbolized a dream of strength, self-reliance, and respect on the world stage, even if only for a moment. In reality, the relationship between the EU and the Philippines is a complex negotiation. The EU, as a major donor, often sets the terms and conditions, while the Philippines seeks to assert its autonomy and protect its interests. Each side brings its own priorities to the table, and the balance of power is rarely equal. These negotiations shape not only policies, but also perceptions of sovereignty and partnership. A real loan from the Philippines to the EU would completely upend this dynamic, flipping the script on decades of financial history. But for now, that idea remains pure fiction, a story that reveals more about hopes and aspirations than about economic reality. The enduring truth is that the EU continues to hold the financial high ground, shaping the terms of engagement. The rumor of a Filipino loan is a reflection of a deeper longing, a desire for greater respect, recognition, and equality on the world stage, and a hope that one day the balance of power might shift. The Philippines' budget is dedicated to urgent domestic needs, education, healthcare, infrastructure, not overseas loans. The government runs a deficit and borrows from international lenders to fund its priorities. Lending $250 million to the EU would mean defunding essential services for millions of Filipinos. The EU, with a multi-trillion euro GDP and its own central bank, has no need for such a loan from a developing nation. When the EU needs capital, it raises billions on global markets with ease. The economic realities dictate that support flows from developed economies to developing ones, not the reverse. The rumor ignores these basic facts of global finance. EU aid isn't just numbers, it's new home seeds for farmers and capital for small businesses after disasters. In conflict zones like Mindanao, EU-funded programs offer peace-building education and economic opportunities. Aid empowers local communities, but can also create dependency or tension, if not managed fairly. The goal is always self-sufficiency, not permanent reliance. The rumor of a Filipino loan to the EU is ironic, given the real ongoing need for international support in many communities. For those rebuilding their lives, the idea of sending billions overseas is bewildering, not inspiring. Experts in finance and international relations unanimously dismiss the loan rumor as fiction. The Philippines is a net borrower, not a lender, and its public finances are managed accordingly. The EU raises funds through sophisticated bond markets, not bilateral loans from developing countries. Official development assistance flows from rich to poor nations, not the other way around. No credible source or documentation supports the rumor. It's a textbook case of viral misinformation. The story inverts the entire logic of international aid and development. The consensus is clear. The claim is a fabrication, not a misunderstood fact. The viral loan story is a modern fable about the dangers of misinformation and the allure of national pride. It spread because it was empowering, not because it was true. The facts show a long history of EU aid supporting Filipino communities in times of crisis. In a world of viral headlines, media literacy is essential. Always check sources and question sensational claims. The real story is one of resilience, partnership, and the ongoing need for international solidarity. By seeking truth over fiction, we become better citizens and help build a more informed, rational public discourse.